Greetings, everyone. This is Eric, founder and CEO of Cubicle Investing. Visit my website at cubicleinvesting.com, and there you can download my free ebook, which you see here over the right side of my shoulder. You can just submit your name and your email address, and also, if you download the ebook, you will be put into my email distribution list, where you will start receiving my weekly newsletter, my weekly financial and investing newsletter that comes out every week, every Monday at 10 a.m. Eastern Standard Time. All right, so I wanted to show you guys a live demonstration of a trade that I'm actually in right now. So today is February the 23rd. It's Wednesday, right? So as you can see up in the corner there. So this trade that I have on Roku, and actually Roku, which is the underline that I have this position on, has become one of my favorite underlines to trade. It's a very volatile stock and it moves a lot, and as a result, because of its volatility and its really wide range of movement, of price movement, it makes for a good underline to trade because you can make good money on it. So as you can see here, this here is a ratio spread. So a ratio spread, basically you're buying and or selling. So you're buying more options than you're selling, or you're selling more options than you're buying. And so in this case, I'm actually selling more options, right, than I'm actually buying. So I bought a call option. So here the calls are on the left side of the strike prices, and the puts are on the right side of the strike prices. So I'm on the call side, right? And so I bought a 129 call option, and I've sold 3 130 call options. And so basically it creates a ratio spread, and because I'm selling more than I'm actually buying, I take in a credit. So I take in a credit for selling this ratio spread. I put this on let me see here, on February 22nd, so yesterday. I put this on yesterday, and then right before the market closed, I put on another position on the same underlying Roku, and I sold a 107 put option. So I took in more credit, right? And so essentially, the objective of this trade is for the price of Roku, which is conveyed by this circle here, as you can see here. So the market is open right now. It just opened 9 minutes ago. The market opens at 9:30 a.m. Eastern Standard Time. And so the objective of this trade is basically for Roku to stay in between my strike price on the call side of 130 and my strike price on the put side of 107, right? So the thing about options is, you don't have to try to predict which direction the underline is going to move in. You can create a situation like I have done here, where you're just looking for the price of Roku to stay within a price range. Okay, so just wanted to make this quick video so you guys can actually see, a live trade. And what I'm going to do is throughout the week, because I only have 2 days until expiration. Now I can close this out at any time, but I'm looking to walk away with the entire $367 that I took in for selling this ratio spread and also this put option. So this will expire on Friday, which is February the 25th. So I'm going to make another video tomorrow to give you guys an update as to how this trade is working out. So stay tuned. All right, so here we are again. Just want to show you guys how the trade is going. Today is still February the 23rd. Okay, so still same day, still Wednesday. The market is about to close in about 4 to 5 minutes, as you can see here. So as you can see, the price of Roku is pretty much exactly where I want it to be. It's right in the middle, smack dab in the middle of my position. The ratio spread that's on the call side, and also the short put at the strike price 107. Right. So again, the objective of this trade is for it to stay, basically below 129 or really 130 and above 107. So far the trade is looking good. All right, so today is Thursday, February the 24th. We're still tracking the Roku trade. As you can see here, the trade, the price of Roku, in spite of the fact that the market is on a major downturn because of the invasion of Russia of Ukraine. So in spite of that fact, Roku is still holding steady. As you can see, it's still above my put option with the strike price of 170, and it's well below my ratio spread, where I sold 3 call options at the price of strike price of 130, and I bought a call option at the strike price of 129. So again, I'm probably going to close this out today before the market closes, because again, with the market putting pressure on pretty much every underline, I'm not too convinced that I'll be able to make it until February the 25th, which is tomorrow, for this trade to close out and walk away with the entire $367. So we'll see. All right, so back. So we're still tracking the Roku trade. Today again is still February the 24th, Thursday. So here is the Roku trade that I've been speaking about in the video. So as you can see here, I've actually tweaked the position somewhat. So before, I actually I had on where I sold 3 option contracts at the price point, or at the strike price of 130. So as you can see here, that position is no longer there. So the only position right now that I have on that expires tomorrow on February the 25th is this long call option. And so it's actually increasing in value. So as you can see it here, this here is that long call that I have on, right? And so now the position that I had at the 130 strike, I actually moved it to a further out expiration date of March the 4th, right? Because the position was being threatened by the price of the underlying, right? So as you can see here, the underlying has been increasing in value. And so if we go to the next expiration date, which is March the 4th, you'll see that those 3 put options, those 3 call options that I sold are no longer at the 130 strike price, but now they are at the 139 strike price. So I essentially rolled the 3 call options higher, because again, the price of the underlying was threatening my my short calls. I'm not concerned about the long calls, because the long calls are the ones where you actually want the price of the underlying to go above the strike price, right? And so now we have as opposed to the 130 short calls, we have the short calls at the strike price of 139. And those expire not this Friday coming up, the next Friday, March the 4th. So what I'm going to do is I'm going to close out this position here and walk away with $300, and then I'm going to see if the price of the underlying stays below my strike price of 139. Now right now it's negative, but eventually it'll start, if the price of the underlying stays below 139, you'll see this negative number turn green, and it'll start to increase in value. Oh, and I forgot to mention the other piece of the position is the put that I sold. So the put option contract that I sold at the strike price of 107. Now you can see here, the price of the underlying is way above my strike price of 107 on the put side. So what I'm going to do is I'm just going to close that out. As a matter of fact, I might just leave that on. We can see it here. It's already close to 100%. So I sold that. Put option at a strike price of 107 for $124. And as you can see right now, I've made 96% of that. So I'm at 119 or 118. Well, 119 is constantly changing because the market is open. So I can actually close this out now, which I will probably do. Right, so all right, greetings guys. So today is actually March the 3rd, so it's a Thursday. Nevertheless, I want to basically show you this, continue to track this Roku trade that I've been in since February the 23rd. It's sort of morphed into a short call, right? A short call where I sold 3 call options and what I call a butterfly spread. I'm not going to get into, the details of the strategies, but nevertheless, as you can see here, so on February 23rd, the call options that I sold were actually at the strike price of 130. So as you can see here, I actually moved the strike prices up to 150 as a result of the price of the underlying. The underlying in this case is Roku. It was actually testing my strike price of 130. Let me just show you how the trade itself looks. Right, so I actually rolled the strike that I had at 130 back on February the 23rd, and I rolled it up to the strike price of 150, and I rolled it out for more time. Right, so now the new expiration date is March the 25th. But as a result of the price of Roku actually dropping in price, as you can see here, the overall position is in the green, right? And so the total credit that I took in for selling Roku, this butterfly spread, and also these short call options is 2301. And so as of right now, March the 3rd, I have made an unrealized profit, and I say unrealized because I have not closed out the position yet. So my unrealized profit is 62.8% of this $2,301. Right, so today I'm actually going to close this trade out, and I'm going to walk away with $1,445. So I should be able to close this out, and that'll be the end of this particular trade. And so again, I just wanted to demonstrate you guys, just how options trading works to some degree, and just give you a visual reference as to what goes on during the duration of an options position. And just real quick, just to show you guys, so yeah, I actually just closed out the trade, and as you can see here, that trade is officially closed, and so I walked away with $1,445 on that Roku position. And actually, Roku is one of my favorite underlines to trade. So I walked away with that in just a little over a week, right? So I put it on February 23rd. Today is March the 3rd, so that's a little over a week. And walked away with $1,445. Not bad at all.